Okay, I've got two slides only, so this is a really short intro, and then I'm going to talk about what I've actually traded today. So you'll be pleased to hear that the main focus of this quick short session tonight is just about day trading itself, about what I'm doing and why I'm doing it. All right, so I've been day trading since 2005, started day trading on oil and grains futures market in the US. I love day trading, I think it's brilliant. And I'm a momentum trader, so I want to trade markets that have got a decent daily range. That's why I don't like Forex. A lot of Forex markets can get very range bound, and it's not for me. I mean, you can, a lot of good Forex traders out there, but I don't look at Forex. Bitcoin is expensive. The spreads are wide on Bitcoin. I just trade the Dow. It's got the biggest daily range in all of the main day trading instruments, and so I like, I've developed a system, and I'm about to give you a quick intro into that. But as you can see, I'm an investor as well, so I use my time at the screens to make refined entries on investments as well. So I'm not just sitting here looking at small time frames. Far from it. I mean, I'm making the point. One of the points I make is about the whole sort of time frame situation. It's not about looking at 1 and 2 minute charts at all, for me anyway. It is for some people, but not for me. I'm looking for intraday moves, not quick scalps. So let's talk about the 8 things I think you need to know. I don't hardly ever trade the FTSE, and I don't trade the S&P 500. Not a lot of difference between the S&P and Dow. I just much prefer the Dow. I've always traded it. So let's just go through the 8 points. Keep the questions coming in, by the way. Markets move sideways 80% of the time. So having a system to exploit that range, but also, more importantly, knowing when you've got a breakout, a breakup, or a breakdown. That's the most important aspect of this, because if you have got the 20% of the time where you're breaking out, then you need to know when to sit in a trade and have bigger targets, and the system tells me that. Indicators, we all know indicators lag. Anybody who's traded for any length of time knows that indicators lag, but also candles. It's all about algorithms these days, and it has been for a long time. So what you find, if you're trading candle patterns, they'll often fake you out. You can have a market that's really sort of swooning down, and you'll get little buy signals all the way along these little turns. So you'll get novice traders counter trend trading, trying to trade up, when all the time this thing is just moving down. So candles are not a good idea to trade. I do not trade candles. It's all about price action. So as far as I'm concerned, following on from that point number 3, yes, on IG, it's the Wall Street 30, I think they call it. That's a good question. What do they call it? They just call it Wall Street. And so, so volume is the only thing that's relevant to me, because if you've got a move that's coming up and the volume is staying solid, or hopefully even going up, then you know the potential for that move and buying pullbacks is good. If you're coming up and the volume is tailing off, and you've got that divergence, then there's a limit on where that market's going, and it may even reverse. what I'm saying here also, just to make this point as well, the points I'm making here, you can scale up into bigger time frames as well as use on day trading. So the whole question of volume is pertinent to obviously daily and weekly charts, just as it is to 5, 15 and 60-minute charts. Okay, and the whole aspect of, even on investing, there's a lot of stocks that will move and then sit there for 80% of the time, get trapped in big ranges. Okay, so there is a code to trading. Those of you who don't know what that code is and don't have a trade plan to trade that code are not going to succeed, or are highly unlikely to succeed. It's like anything. If you're going to be a dentist, a doctor, a lawyer, accountant, any professional, you need to train hard, and you need to have a specific method of conducting yourself, conducting business, and solving problems for your accountancy clients or your lawyer clients, etc., etc. So, simple point, but you'd be amazed how many people come into day trading and don't really log on to that, or lock onto that, I should say. So it's, I think, a point well worth making. And intraday reversals, if you get intraday reversal, they can be the most profitable. For example, let me just clear that. If you've got a market that starts off, if this is the normal range from the previous day, and you're starting off either way above it or way underneath it, because of this point here, if you're kicking off in these levels, the chances are you can come back into the range from these levels, and quite often you can go from one extreme to the other, and vice versa. So that's why intraday reversals can be very, very profitable, and to some extent easier to trade as well. So, for example, if you've got Dow did this on Friday on the GDP number. It kicked off the market on the floor underneath the previous day's low and came back, and it finished the day right at the previous day's high. So that intraday extension reversal was worth about, I think it's about at least 500 pips, I think. We'll go and check that back in a minute. All right, so only traders with a system can make money. I challenge anybody to tell me otherwise. Unless you've got a very specific system to get you in and out of a trade, I don't think you can make money. And that's the whole point of not switching around different currency pairs, or not switching from oil to Dow, or pound to gold. If you've spent the time and invested in studying one market, and you're prepped for that for when the market opens, then again you go into the day trade with a plan, implement your plan, and expect to make a profit. I've skipped a point, haven't I? I skipped this point here by mistake, not on purpose. Believe it or not, weekly charts is my favorite chart. Even as a day trader, I'm most interested in what the weekly chart is telling me, because there's so much noise out there. Weekly charts can really cut through so much noise and let you stand back and see where the market, where your biggest profit potential is in any one market. I also try. I also trade oil and gold and so on, but at the open of the markets, it's always the Dow. Okay, so I actually took a trade off of the weekly chart on oil yesterday, and it didn't work. The reason why I took it is because if you do catch a reversal in a market, it can be very, very profitable. So the risk-reward ratio of selling a high of a market that's potentially topped, you can get a very close stop. So I risk very little capital. It had that oil reversed. It's not reversed. It's continued on the upside. Had that oil reversed, my little stop up there would have given me a risk-reward ratio at least 5 to 1, if not more. Instead of 1, 2, 2.5, 3 to 1. Potentially even more. Could be as much as 10 to 1 if the thing had worked and worked into the rest of the week. So that's why. But I think by only studying weekly charts can you really start to evolve your plan for the week and plot your week to allow you to get the best moves. Because, for example, if a market is going to reverse, you can see it in a weekly chart, and you can risk very little money for potentially very high rewards. Now, it's not about catching reversals. It's about normally it's about catching a trend. Hence, point number 1. So it's about where the support levels are that you can see in a weekly chart that can give you the potential for an intra-week move. One final point, which isn't on here, but I'll add this point, so it's 9. One of the most important aspects of being a day trader is I hinted at this right at the beginning, because I said I'm an investor. I've been an investor for far longer than I've been a day trader. You can hedge. So, for example, in something like gold, if you are investing in miners, and you're day trading gold, if your mining stocks have been really stuck in mud at the moment, most of them, but you can still make a handsome profit day trading that sector by trading the actual gold itself, the asset itself on the futures or ETF, whatever. So you can hedge. And also, this is the whole point of the futures market anyway, isn't it? The whole point of the futures market is to hedge. So if you've got, I don't know, 5, 10 plus stocks, and you get a bad hair day, you could sell the indices to offset the pullback that you're getting in your stocks. So for a more sophisticated trader like me, hedging is a very important aspect to day trading, but it's just nice to top up your income via day trading as well. Right, that's the slides done. So what I'm going to do now is just pull up the charts. So I said to you that indicators lag. So here we've got gold on a 15-minute chart with this week's range. So we got a nice bust up on Friday. So we got this breakout pattern on Friday from the Thursday support. So overnight Thursday we pulled up into the afternoon, into our afternoon, into the US morning. Gold got bought at 17.21, give or take a few pips, and went to close to 1770s up there. Must have done about 17 1765, I think. So all I've been doing this week, surprise, surprise, is buying the lows. And in the futures market, taking off at resistance. So I'm currently in this trade at the moment. And just looking to see if we can go back to this level here. At some stage, in what is a range-bound box play like this in gold, at some stage this is going to break. It's either going to break the low or break the high or break the low. So if you're trading this and you've in this particular market you find yourself above 1770, you know you've got a breakout, and you can look at extension levels up here into 1780, 1790, possibly 1800. And likewise, if you break under this level and open and close under here, we could retrace back down to this breakout area. So in really, just by putting support and resistance on this market, you can see where the opportunities are to buy, where the opportunities are to take profit. And that's number one. Number two is you'll know if you've got a breakout from either there or there. And if you've got a system, you'll know where those breakout targets could take you, which our system does. All right, so I'm sitting on this one, just seeing, obviously at the moment we're struggling with this range, the midpoint. So I've taken off the bulk of my trade here, took it off at the high, and I've gone back in a small position on the low to see if we can subsequently break up. I'm going to add to that if we come up here and then drop back to support. So I'm scaling out. I've scaled right out on that resistance, scaled back in on the pullback. Now I want to see if we can close above that level overnight. So that's the gold. I'm going to show you a mistake I made this week as well, just to even things out. Right, let's look at Dow. Today in the trading room we bought the low. Now there's no indicators on this chart apart from volume. No indicators at all. And the key to this particular market, and this is one major aspect of my day trading market, is this. This purple line here is the Monday close. So the market closed just narrowly above 34,000 on this market. So why did I buy the low on this market today on the cash open? Because this is what's called gap and go. This is one strategy we use if the criteria for gap and go applies, and it did today. If you open at over 100 pips away from the close, i.e. the gap, and we did today, what I'm looking for is that classifies as gap and go. So then I buy a percentage of the gap fill. And then I look to go back to resistance for the exit. So this gave about 330, 350 pips today on this strategy. This is one of the easy, I find this is the easiest strategy to, I'll answer that in a minute, in a second. I find this one of the easiest strategies to use because there's a measure to, once the market has come up, there's a measure to what the cash market might do into the open to give you the chance to get in, and then if you break the European high, then you know you've got a breakout. I'm going to show you bigger time frames in a minute. Right, let's have a look at my normal time frame is for intra-week trading is a 60-minute chart. For assessment and prep, after I've looked at the weekly and the daily, and then I drill down to these smaller time frames to look for the entry level. Okay, let's look at oil. Now this is the mistake I made today. I say mistake. This is what I did was I looked for a reversal. I thought the oil had the potential to reverse, so I shorted the high at the high, and then I actually shorted this 77. We're currently 78.80, having touched 79. So I went short. Actually, I got, yeah, no, it was 77, wasn't it? Yeah. So I shorted at last week's high with the potential for this to start to break down. It's not, it's broken up. So I got out for a small loss and walked away. Had that have worked, had we found ourselves under 77, I think we could have pulled back to at least, well, 75 was the most obvious next stop. 70 is obviously the big number. And had it really a slam down, we could have come all the way back to 60 over a period of time. So, yeah, but that's my sort of privilege as a day trader, to have the opportunity to take potential reversals with very limited risk, with very high risk reward ratios. So this brings back to one of my main points about looking at the weekly chart. You can see that what we've got on here this weekly is a key resistance point, which we have subsequently broken up from. Just as a point of reference, this is one of the clearest Elliott wave patterns you'll ever see. Robert Elliott designed this pattern in the 30s from his sickbed. Wave 1 is the impulse, wave 2 is the pullback, wave 3 is always the strongest, wave 4 is normally shallow, and wave 5 completes the move. And then you normally get a three-wave correction. A, B, C. So this point back here in August was the end of a 5- and 3-wave move in oil. So at the moment we are completing a new wave 1. So wave 2 might take us back to 70, and wave 3 might take us up to 80 plus. No, that's not, let me do that again. Sometimes this doesn't work properly. So you can see why I thought the potential for that was good. So I think we're close to 80 now anyway, aren't we? Let's say it goes up there. Wave 4 is the pullback, and wave 5, who knows, could take you up to 95. That's the bullish scenario. The bearish scenario is obviously to close under this 77 and pull right back and continue back to 60. All right, but this just shows you the kind of analysis I do in preparation for my day trading and for my hedging. Right, any questions? Let's have a look at the FTSE while we're here. FTSE is flat for the week. The Dow is slightly higher for the week. This is my projection for the Dow. 5-wave move into 33,600. A wave correction potentially complete. B wave taking us back up to the highs potentially. And then possible deep wave correction if this falls flat. The other scenario is that the A wave, so the B wave only corrects into this 35,000, 34,800, and then we correct potentially back to 32 or all the way down to 30. So a couple of scenarios there. Why do I say that? Because we're very divergent up here. Huge sell volume on the end of September. That was into triple witching anyway, which is not uncommon. But I think any rally now at the moment is to be sold into, because if you look at the weekly, so monthly, that is a huge sell signal. I'm in day trading. I'm only in gold at the moment, and I do trail my stop. Yes, I've day traded up into resistance on the Dow from support. Done the same with the gold, but I've taken profits in the Dow. I've not taken profit. Well, I've scaled out of the gold. But looking for, so gold had a good day yesterday, pulling back on itself. So I'm just looking to see if gold can push up into this 1800. If I think the market is range bound, and in terms of exit, I have an exit strategy based on whether the market is proving to me it's broken out or not. If the market's not breaking out and the volumes are dying off, I'll just take the higher the range if I'm long and the lower the range if I'm short. If the volume holds and there are certain boxes I can tick intraday, then I will hold it and just push the stop up to break even. What I quite often do is either push the stop up to break even and yeah, it is, and manage and lock in profits, or lock in my spread, cost of my spread, scale out at resistance and hold on for the final lots if it is breaking, or potentially just go in and out. You know, if the market is just really range bound, just go in and out. All right. Anybody interested in joining me in the trading room, then this is the link to the program. So it's a simple modular based program that gets you into the strategy. So the strategies here are listed as gap and go, which we talked about, open breakouts, pullbacks, and intraday reversals, key intraday reversals, the likes of which we see occasionally at least once a week, and they are very profitable. Okay, there's a strict exit strategy and risk management strategy, and that all happens in the live trading room. There's a chat room and an alert system. Okay, so if you want to join us on that, the next one is Saturday. Scroll down, then go to the booking, and that shows you 9th of October is the next one. Right, any questions? Dow is still picking up. So this is currently working at the moment. As to the platform, that depends on normally how experienced you are and your account size. I do use IG, but I use a futures account. But if you are day trading on a smaller account or a small account, I would suggest a broker like IG Index, because you can get these charts are from the Pro Real Time that comes free with IG Index. Otherwise, Pro Real Time is fairly expensive as chart packages go. So you can see we've got this overhang. If we can push through this overhang, then I'm looking for this to sell into this point. It hits somewhere around this point here. Have you got an IG account, Andy? You have, right, okay. Well, if you've not already done so, you can activate Pro Real Time on that account and CMC. Okay. Why have you got two, I wonder? Anyway, so what have we got? Yeah, I talked about DAX. This is the low of the box play here. Right. So yeah, I forgot another trade I did today was buying the low in this DAX, because this is a huge box. We've been in this box since April, so a huge chunk of this year has been spent in this range. Broke out of the range here in August and popped back in early September. So if this holds, this is potentially very bullish. If this holds and we break out of that little range, that could pop up to 800 plus pretty quick. It just shows the importance of understanding bigger time frames. So to me, day trading is not about coming into 2, 5 or 5 minute charts. It's about really making sure you've really got your hands on the big picture, which is why people like the trading room, because in the trading room, I've done all the hard work. A lot of people just come in the trading room and follow my trades. I don't mind that. That's fine. Yeah. So it's 575 for the program and 4 weeks in the trading room with alerts. So that 575 covers you for a lot of resources. So the program is 4.5 hours with all the cheat sheets and simulated trading, etc. Then you've got the live 5 days a week live trading for 4 weeks. You've got alerts. I'll give you the link for this. Then you've got the alerts. So all of that is included in that price. And then if you want to continue after the first month, it's £95 a month for the live trading room and the alerts. Okay. So the booking form is on the, let me just clear that. If you go on to the information about the modules, the booking form is just under here, this red button here. If you scroll down, that takes you to this page here. Okay, if you want to have a conversation about any aspect of that, then by all means, let me know. You can contact me from the website, or I can give you my mobile number now if you want to hold that. In fact, I'll put this in the room. Oops, that meant to go for everybody for some reason. Right. Any questions? Let's have a look at, so the Dow is still holding up and the gold is still struggling at the 1760. But this is a very interesting market though. If this, let's have a look. Let's plot this, before we go, let's just plot this on Elliott Wave. Not easy actually. Some markets, not every market is volatile enough to plot. So the beginning of the new wave pattern was February this year. So then we saw 1, 2, 3, 4, 5. A, B, C. So the C wave began on beginning of May. And we did a 1, 2, 3. Yeah, you see, by the time you get to May, the patterns are really struggling and confined. If you can't see an Elliott wave pattern, it's because there isn't one. There isn't always an Elliott wave pattern. It's not a given you get an Elliott wave pattern. It's but if there is one, then, and the volatility in that market is enough to validate an Elliott wave pattern, then it is an extremely useful tool to use that. And if you lay fibs over the whole thing, it makes much more sense. Let's do that now. Well, there's the fibs of the COVID move for the DAX. The extension was 15,480. We're very close. Yes, we've been pivoting around this extension. Spent a lot, sometime above it, sometime below it. So if we get back above 500, that could give us scope to at least get back to 16,000 and potentially keep going. All right. Right, there's no more questions coming in, so I assume your questions are run dry. Gold is picking up. At the moment, all we've done is match yesterday's range on the daily chart, whereas the Dow has punched much higher. But I made a good profit in the Dow, so that's fine. So if you plot, no, that doesn't work. No. Right. Thank you very much for joining me. By all means, drop me a line or call me if you want information. Looking forward to the next. I always look forward to these Scalper School programs because I update everyone every time. I update each program. I refine each program so that it's got updated data in it. So it's good fun to go over the program and to instill it. It's a small, normally about anything from 5 to 10 people normally. I don't go out there and mass market and fill it. You know, I keep it nice and intimate so that people get a chance to ask as many questions as they like. I can see that gold is pushing up through 1760. Yeah, so it's you know, it's not. I deliberately keep the numbers down because so that I can offer everybody that sort of quality of response. Fine. Okay. Well, okay. Grab my number and yeah, we'll chat. All right. Thank you very much for coming. I've kept that fairly short, and I'll speak to you soon. Thanks, everybody. Thomas, how are you, by the way, Thomas? You must catch up and tell me about any progress on your investing, and let me know if you're interested in day trading as well. Good. Okay. I will catch up with you all soon. Thanks very much. Bye for now.